Good morning, everybody. Welcome to the Flow Show. Another week to get our teeth stuck into. Hope you all had a good weekend, and I wish you all a good week ahead. Morning, Kay.
Morning, Ryan. Good morning, everybody. Have a good week. Yep, from me as well.
Yeah. So, right, let's get stuck into things. Going to start. Well, China's back to the party. They're coming off their Golden Week holiday. Nothing really out from those guys of note. They are back with a fixing, which they continued where they left off, fixing in the 717s. So trying to keep things in check on that front. Coming across to the ECB. ECB's not says we are getting on top of inflation. Policy is in a good place. He's comfortable with a current stance on policy. They had a little dig saying that governments are not being helpful in stabilising the euro economy. ECB's Vasile says we're very close to a rate peak. It's impossible to tell today, though, if we are done or more could be needed. ECB's Wojcik said if projections stand, we'll manage a soft landing. I'm not sure how you can manage a soft landing when it seems your economy is already on the ground and stuck in the mud. Anyway, he says we are seeing a soft landing right now, and it's possible to get inflation to target without a recession. Again, good luck with that one. ECB's Kazakhs, one of the hawks, said any future rate hike would be relatively small. We can currently also count on the fact that we may pause and that cuts can start when the inflation outlook is permanently below 2%. That's not, I should say, that's not a comment that's talking about cutting in a negative economic environment. That's more about getting rates back to a neutral level. ECB de Guindos says economic growth in the second half of the year is likely close to zero. That's going to be the case because we've got some data out of Germany this morning. Industrial production looking a bit soft as it has been, down 0.2%. Not as bad as 0.6 prior, but still worse than expected. Year on year, down 1.75%. Just looking back to last week's data and a stonker, another stonker of an NFP report. They're coming in at 336,000, pretty much taking everyone by surprise on that one, blasting through expectations. There were some potential skews in there. I wouldn't say skews, but a bit of bounce back. I did see a couple of comments saying that there was going to be a pickup for things like teachers that had seen those dropping down earlier. Government payrolls there, as you can see, 73,000 playing into that sentiment as well. But overall, unemployment rate stayed unchanged at 3.8%, as did the participation rate. Wages, they missed by a pip on expectations, but they're still sticking around that 4.2, 4.3, 4.4% level. So all in all, wages still in positive in real terms once you've taken inflation into the mix. Overall, another very solid jobs number and absolutely no red flags to be seen there, which in one sense we knew about because none of the metrics that we'd seen previously, initial jobless claims, the PMIs, so on and so forth, indicated any real issues. Canadian jobs as well coming in strong, nearly 64,000 added to the employment there, was expected at 20k. Participation rate went up there, and the unemployment rate stayed unchanged. And, you know, that's pretty much a perfect storm for that, where you see participation rate going up, but the unemployment rate staying the same or going down. So tells you it's a good story there. However, something that's not quite as strong looking is the usual revolving door. Full-time only put on just under 16,000, and all the numbers went into part-time employment. Now, the trend over the recent months has been strength in the full-time employment category. So it's a bit of a small wobble, let's call it that, but we'll need to see how this changes moving forward, as to whether there's a lot of people going into part-time work, because that can indicate that full-time positions aren't there, or that people are just, coming into the market because they're trying to make ends meet and taking part-time work. So it can give different signals, but I'm not going to jump up and down over this one on just one report. We'll have to monitor the next ones to see if that's a trend that's going to flow from that. Also there in the Canadian numbers, wages ticking up as well. Hourly wages for permanent employers up to 5.3% on that one. So again, some inflationary pressures still in the pipe potentially for Canada, and particularly the BOC on that one. Over to the Fed heads. Fed's Mester said the jobs market is very strong. It's a strong market, but it's getting less tight. And the report showed tempering wage growth. The next Fed move will depend on incoming data, she says. Now, last week, she said she favoured a hike at the next meeting if the current situation holds. Really, given that jobs report, it's hard to see anything in that situation changing. Fed swaps shifted their rate cut pricing out to September next year from July next year. So this data, again, moving up those cut forecasts as far as swaps go. The big number this week is obviously the US CPI on Thursday. That's going to be the next big piece in the puzzle for the higher for longer trade, but we can talk about that later on in the week. Now, one thing I've been keeping an eye on, or half an eye on, is the US consumer credit. Just in case you haven't seen it, comes out late of an evening. It came out late Friday, down just under 16 billion versus a gain of the 12 billion expected. There was a bit of skew in this one because we've come to the point where student loans are now back on the agenda and being paid. So non-revolving credit did a lot of the hefty work there, down 30 billion. So a bit of skews in the numbers there. Consumer credit coming down, that big chunk doesn't mean everything is hunky-dory, but we need to let that wash out in the next couple of reports. So just in case you saw that one. President Biden says no meeting with China Xi is set up, but it is a possibility. In the meantime, Xi met US Democrat Senator Schumer and said that China and the US should respect each other and collaborate to promote US-China relations. So at least some talks going on there. That's all I have for the headlines. Kay, any comment on anything that's popped up? Obviously, we've got this terrible situation that's happened in Israel that has affected risk this morning. It's not hopefully going to descend into anything else that involves many other countries. Obviously, our thoughts are with the people over there on both sides, really, because as usual, this is political leaders fighting, and it's always the people on the ground who suffer. But anyway, we're seeing a bit of risk moves in there, and we need to just keep an eye on that. With the US half shut today, stocks are shut. Stocks are going to be open, but bond markets are going to be shut. Anyway, sorry, Kay, got anything you want to pick out of all that headlines and news?
Yeah, first of all, again, humanitarian horror situation, so we can only feel for those people who have nothing to do with it and just are victims, unfortunately. Well, yeah, it overshadows whatever came out as other news or the data that we saw. Well, there's a couple of things that I would like to highlight, and I said it on Face on Friday, and we saw exactly what happened there. Very good numbers out of the States, and we saw the S&P and all the equity markets actually holding very well. As I said on Face, I mean, good economic data don't really warrant an equity market to sharply drop. So we had the reaction on the actual release, where the bond yields jumped and S&P got sold off, but we never made it below this 4,200, and that was a telling story. Right afterwards, it rallied. Of course, with the situation in Israel and the uncertainty surrounding whatever may happen next year, the equity markets are coming off a little bit. But yeah, I mean, it's just to highlight sometimes the reaction of the market can be, the initial reaction can be a bit wrong and apparent, and not apparently. And as a matter of fact, it took the whole spot FX market by surprise as well, because where the dollar was doing very well for what is it, half an hour to 3/4 of an hour, when the stock markets reversed, the FX market reversed as well. Market buying a bit too expensive dollars at the time, and we also saw actually the yield market coming back a little bit, because probably what's happening there is that we are at very important levels if you look at in the long end, and people now thinking that the more the long end goes higher, the more we are at risk of a recession coming. So there were a few things at play there after the event. But okay, I mean, all in all, very strong report. If you want to pick the negative out of it, is that we did not see the wages go higher, but I mean, one can't have everything all the time. But yeah, I think a very strong report. Canadian report was also quite strong. I hear you on the balance between temporary and full-time jobs, but that part-time job thing is volatile of late. So I do think that all in all, it's a very good report actually. So I reckon the Canadian dollar will, of course, now help with higher oil and gas as well, with the situation in the Middle East. But I do think there's a case for the Canadian dollar to hold up pretty well, regardless of whatever happens over there. And what else? What I also noticed is the gradual. Well, I wouldn't say the recoupling or re-risking to China by the US, but the will to seemingly get negotiations or at least communication going a bit stronger. I think the US realized that China is slipping more and more into a territory where things could get more sour. So I think they want to do something about it. And regardless of economic data out of China, it does look like that may be at least a temporary factor to give the Chinese yuan a bit of relief. And that is, I think, reflecting in the dollar CNH right now. And we'll probably look at it, but it does look like we really have found a strong resistance there above that 732, which was always the 2% band top of the dollar CNY fixings, and it does seem that the PBOCs, at least for now, succeeding in putting a cap into the dollar CNH. And it's going to be interesting, because if you, well, assuming that the bad situation in the Middle East is only a temporary one, that could mean that somewhere the business-wise there may be a little bit more optimism on surrounding China, perhaps, and we may start to look at the other side of the dollar China, in my opinion. But that remains to be seen, of course. But for the time being, at least, I find it pretty amazing is too big a word, but pretty good, or at least for the trading side, that we could cap above that 732. I think it's quite something.
Yeah, very much so. It looks like we've got a bit of a pterodactyl formation going on there in dollar China. That's one of my made-up signals. I know people like to pull things out of the air with that. But yeah, I mean, I was less inclined to get involved up here this time around, given what was going on in the dollar last week and so on. But here we go again, 732 resisting there. So we're looking down again, seeing what's going to happen at this 728, 27 area. That's seen a lot of traffic as well, and then under there 725. So really got this range that we're playing in at the moment, and it's really going to take a break and hold of either side before I think we get the next main direction. So yeah, still have to stay short on this one. I'm just a little bit more cautious in up at these levels here, so keep an eye on that one as well. Yeah, dollar CAD, as Kay mentioned, we've moved back into this trend line, wedge, whatever you want to call it. You know, we had a little look above. We stayed above for quite some time. We're now broken down in it. I need to chop that fib up. I'll adjust that later. 36.5 is the big level. We've had a little pokey below. It hasn't held. We're just hovering around that area. So again, this might be a bit of a pivot point. If we find ourselves holding below it, then we may have a push back down towards 135s perhaps, hold it, and then we're going to decide what we're going to do against this trend line again. So this is, let's say, a bit of a pivot level, possibly this 136.5 prior action level. I'm not in any CAD anymore. I was long and got stopped out on my trailer. So I'm pretty much sitting on hands on this one for the moment. Though I'm still more a rally seller on the fundamentals in dollar CAD than I am a buyer. So I may look again this time, as I'm not long, if we get up to these 138 levels again, maybe see potentially going for a bit of a short, just to run on the fundamentals into the next BOC, see what they turn up with. But yeah, got to keep an eye on oil as well. And obviously oil has had a bit of impact given the situation in the Middle East, as it always tends to do. But, you know, nothing really we can say that's massive at the moment. So just another one I need to keep an eye on. It's really a case of whether other countries get drawn into this. You know, for example, we knew that Saudis and Israel had been talking pretty closely over the last couple of weeks. So whether this incident now upsets that apple cart remains to be seen, at least from a oil energy perspective anyway. So that's some of the stuff we don't know what's to come. So we have to be a bit careful with that. Looking at some of the metals, I'll let Kay take silver, but gold, again, finding it, you know, coming into this 1800 zone, not quite getting there, but finding a bit of support down into that area. And we've seen a fairly strong bounce from that. There's a bit of, you can call this probably a bit of an area around 1850s. Really, it's up here where it gets juicy, back up into that 1885 is going to be a key level if we test up there, because that was the strong support point. So it's likely to be a strong resistance point if we do climb back up there. But, you know, these lows have been coming down. So I think we probably need another confirmation, maybe around 2030s. Get that will mark the case for a stronger bottom down here, if we can't maintain this rally that we've seen already. Not sure what else to look at. Yeah, US yields at the moment. We nicked that high last week. It's a printed high. It might just be a spread thing. I don't know, based on the platforms, but this candle afterwards could be pretty significant because we didn't manage to get back to that high. So we're going to have probably a bit of a range maybe to think about with this, taking it from around this sort of area here. You know, this is a bit of a step up. We had a bit of resistance there. We broke above it, and this 470. 470 has been a bit of a level going back as well. So now we've got a bit of a game. What's going to happen? Are we going to take out these highs and continue on, get up to that magic 5% mark, or is enough at the moment and we're going to head down? We're not going to find out today because bond markets are shut. So but that's going to be an indication. Keep an eye on the other assets, because this might have the potential to either show a bit of a gap up or gap down when bond markets open. I think they're opening, or Globex will open, is it 11 o'clock, 12 o'clock tonight, Kay?
I don't know, but the futures are open there. So we have
The futures are open, are they?
yeah, we have the if you put the ZN1 exclamation mark, you should see the futures.
I've got those there.
Yeah, ZD, ZT, whatever. You can have one of those. They jumped a bit overnight. The futures.
Yeah.
So
okay. Keep an eye on that.
Hmm.
But yeah, in a, irrespective of the events going on, it's going to be a marker going forward as to what we do up here.
Yeah, and perhaps today we may see a bit of a volatile moves in there because they can only trade the futures. I'd say for the bond market to take a direction, even though we had this jump now in the futures, which puts the yields lower, I think the 10s is trading around, if you overlay it, I think the 10s are trading around 470 somewhere instead of 480. But yeah, it's going to be tomorrow, I think, when the bond market fully reopens, that we may see the effect, if in the meantime we haven't had any more developments over in the Middle East, of course. And I'm a little surprised actually that yields are lower. I thought well, from a trader's perspective, that war is inflationary, but okay.
Yeah.
Let's see what they do first.
Yeah, exactly. Nick asking about the feed on YouTube. I'm not sure, mate. I'll have to check with the guys around the back.
I've signaled it. I've signaled it to the guys in the back. And then I see Ali's reply there. Perhaps Nick needs to update. Okay.
Yeah. All right. So that's been flagged, Nick. So we'll have a look at that. Anyway, right, this week there's not a lot of data out. I can show you my calendar, but it's not updating with the right time zone for some reason. So you'll have to have it in US hours just to see what's coming up. So as is always usually the case after an NFP week, big data week, not a huge amount on the calendar. We get German CPI coming out, so we get some of the regional numbers from there, I think, or unless it's the final number, I can't remember. PPI, funny enough, coming ahead of CPI. That often comes after. So the market's going to get maybe a little bit of a taster here before the CPI on Thursday. We get the FOMC minutes, which shouldn't be anything too shocking. Because, as usual, we hear from every Fed member 80 times over since the last FOMC. Some price data from Japan as well on Wednesday, so we'll keep a little looky at that one when we get it. ECB minutes as well, same thing as Fed minutes. We know the situation on those. So that CPI data is going to be the big number of the week there. But also keep an eye on China. We get some CPI data as well. Have they started picking up a bit? Market thinking that they may enter a bit of deflation over there. So we'll see what that brings. Really on Friday, we get consumer sentiment, the Michigan flash number there. So we get to see what the latest thoughts are from at least 500 US consumers on that front. So not an overly busy calendar to keep us entertained. So we'll have to get a lot of our moves from elsewhere. Kay, you got anything exciting for us to look at?
Exciting. Yeah, exciting. Okay, let's just take a look at a couple of things, and I'm just putting on that the 10-year futures. Let's do this. I can't show you the my usual interest rate differentials, because of course that market is closed right now, so the differentials are wrong. So we'll have to wait for that for tomorrow. So, but you look here, these are those 10-year futures, and they saw a pretty big jump today at the open. So if you look at it, we are still in this broad downwards channel, and that is not going to change for as long as we are below this 108 and a quarter, 108 and a half zone on the future. So this one is something to keep an eye on today for the developments, and you will also probably see the dollar react to stuff like that versus the risk currencies, perhaps like yen and Swissy. If you look at it, like for instance, cable euro dollar lower, but the dollar yen hasn't moved, is actually a bit lower than on Friday. So that's your risk pattern there. Same for the dollar Swiss. It's hanging around 91 the figure, and that's like that's on the back of this Middle East, of course. And what happened actually on Friday when the yields couldn't really hold too much. I'm keeping an eye on this Euro Swiss now. I'm leaving the dollar side alone for now, although 91 is an interesting level on the dollar Swiss, as I've already said. If this risk is going to get worse, this one is probably going to break sub this 95, 85, 90 and go lower. I'm in a little tryout to catch a knife, but it's really small. I don't want to risk much. We are on the level, so we'll see if it holds or not. It does look like risk is starting to feel a bit more fragile again. So this could probably break. If you look at the dollar Swiss, I think it's this. No, which one am I looking at? This one. Here you can see this 90, 85, 91, the figure, and we are trading just above on the dollar Swiss. So a risk pair, when risk is in play in the market like it is today, the Swiss is one of those currencies that can react to risk. Okay, so keep an eye on this 90.85 or 90.80, 91, the figure on the dollar Swiss. We are just above. On Friday we ramped higher, and then we went for a bit of a stop run on all the dollar longs, and this crashed through it. But we are holding around this 90.80. Okay, so this is one to keep an eye on. Then oh, hang on. Yeah, I know Ryan already took a look at this gold, but I've been saying for a while, yeah, this 1841, this is a level to watch. We are now back above. We went on Friday. On Friday we rallied up to around 1833, so nowhere close. Now with the situation now, we are obviously through it. I'd say keep an eye again on this 41-44 zone in gold, because we were already going higher on Friday, and I reckon with the uncertainty of the situation now, if any setbacks here bring it back to 1840, I reckon we should be finding some buyers, sorry, at the start of the week. So I'd keep an eye on that. And top side 61.71 before talking about the prior low 1885 and then back 1900. As unfortunate as it may be, and we obviously feel for everybody involved, is that in a situation of war, gold is one that's bought. Okay, so yeah, I'd be careful to try and counter this right now, unless we hear that the situation is really quieting down. Then we could have a setback and looking a bit failure-ish back through this 1840-41. So that's the one that I'm keeping an eye on. Silver, big jump on Friday as well. And then overnight as well, big jump at the open. We went close to the 23.6. Also, a bit of a horizontal level around the 22 zone. Downside 21, 15, 25. If that holds, I guess we are going to retest this zone sooner or later. But for now, it's a bit of a watch on silver. I think the bigger risk metal on this one is probably going to be gold right now, because this is the bigger market. This is where the market really hides in when things are when risks on the geopolitical front are very high. So this one may hang around for a while here, but a little bit in line, and we've seen it on the rebound as well. A bit in line with what happened in the S&P, for instance, is that if you see very good economic data, there's very little, even if yields go higher, we've seen exactly the same happening here of what happened in the S&P on Friday. And this is for all of us traders a very interesting development. Okay, so this is your knee-jerk move on the NFPs, sorry. And then straight away after, we started to rally. So silver needs good data as well to go higher, and we've seen it. So it outperformed gold on Friday. So again, that brings me back to what I always say. I mean, silver is an industrial metal. So if things go pretty good in a country, especially in the US, silver, or globally, silver will tend to do better. And if you look at what's happening in China, if you see some recoupling or thaw of the relations between the US and China, this one is one where I'm going to be paying very close attention to. Okay, that for a little bit of this and that's. The rest, I'm really we're in the range on the euro dollar. We're watching again 106.10. I reckon, as a bit of a pivot zone. If you go back below and you hold below, it's probably going to retest those prior lows, or 104.80 for a starter. Interesting is that we went we put in a. I need to go on a lower time frame here. We put in a good test of this of the tighter trend lines. We even broke above, but the wider ones are still holding okay on the euro dollar. I think for as long as the global move is below 106, perhaps I should put it a bit lower now, but call it 25.40. That is going to be your zone where euro dollar will start to break up again if it goes back above there. And in the meantime, those trend lines are coming down and down and down. So if you get out of it, you may have some stop losses, but the lower they go, the less they will be important. And then we have to start look at real fib levels again. Okay. I have very little to say about yen today. Very little. We're turning around. Well, Japan was closed today, right? But still, it's very, very quiet in the yen market. The crosses will likely move around on the back of a bit of risk. But I'm actually surprised with the bond futures being higher and yields being lower elsewhere. That the dollar yen is not a bit lower actually, or the yen is not actually a bit stronger than this. So I'm quite surprised about this. One that I said on Friday to keep an eye on and look at those boundaries. 144.90 figure on the CAD. We just went to test it and broke like the usual algo pips just a little bit above. And on the downside, 143.80, we just went a little bit below on the data, and then we jumped. Of course, this morning moved lower on the back of higher oils, but still, I reckon if for those who are not big believers in the euro, just like I am actually, this one could hover around here for a little while, but I'd be surprised if in current context we start to break above 145 again. So that's my approach to it. Played it on the short side, took a few pips, then went out of it. Want to respect the levels, but it does look to me like we may see a bit of follow through if we can break below 143.80 again and hold below there for low 143s. For the rest, we are going to be watching risk, and I think yeah, Horatio, exactly. You know, is the yen not trading as a safe haven currency? There may be just too much going on in Japan. You know, with extra stimulus packages, with extra JGB buying by the Bank of Japan that they have already done last time to keep those yields in check. We have seen yen decouple from risk lately, right? So and it's been going on for months and months. So for as long as the rest of the world doesn't collapse around it, we cannot forget that, for instance, oil is higher. Japan is an importing country. Stocks are higher still from compared to Friday. All those things. There's a lot of pushing and pulling in the yen right now. I'm just managing my option, and I'm very little inclined to really dive into a lot of yen right now. Ryan, back over to you, mate.
Thank you very much, mate, for all those lovely updates. Yeah, I'm in a bit of the same boat. Just going to keep an eye on levels and stuff. Dollar yen, I've not real got a feel for. I think it still needs a bit of sorting out after last week's events. You know, there's going to be a lot of eyes on that 150 again if we get up there. But, you know, the dips still keep getting bought. So still a bit of a mix what needs to happen in there. And also, as Kay mentioned, that euro dollar into that 105 level and just below. If we get another look down there on this risk-offish mood today, might be worth a little look. But as far as that goes, for the longer term, it all remains whether we stay above or below that 105 area. Anyway, I hope we got you set up for the week ahead and the day ahead. As mentioned, it is half a US holiday, so you know, no idea what liquidity is going to be like later today. Yeah, headline watching.
Ryan, if you allow me, Nick said something about yen likely won't. Yeah, those comments from Shinohara. It's always fun for those guys who are former former top diplomats, former Bank of Japan, former this, former that. They all have a lot to say when they are not in the seat, but when they are in the seat, they speak differently. So he, I think, does not know whether Japan is to seek or not to seek to hold the yen downtrend.
Yeah,
my long-term view remains unchanged. I think Japan has an issue, and I think in the very long term, yen will weaken, but that is not to say that they won't intervene to curb any additional weakness right now. And I don't think that Shinohara-san is really the right person to know now what they want to do.
Yeah, that was the reason I didn't include his comments on today's news list, because yeah, you got to take these X's with a bit of a pinch of salt. This case is already it's all right talking from the sidelines. It's a different situation. We're in the hot seat. So yeah, anyway, take care with this liquidity later on today with the US being half shut. Hope you have a great day and a great week, and we shall see you all tomorrow. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.